One of the biggest misconceptions about a reverse mortgage is that you need a perfect credit score to qualify. But when we're talking about a HECM, which is FHA's version of the reverse mortgage, there is actually no minimum credit score required. Doesn't mean we don't look at credit. It just means that we look at it differently. Instead of looking at credit score, we actually look at your credit history over the last 12 to 24 months and what your payment history has been like in that time period. We're also looking for things like, was your mortgage payment paid on time if you still have one? Was your insurance and your property taxes and your HOA dues, were those things paid on time? Because even with a reverse mortgage, you're required to pay your homeowner's insurance, your real estate property taxes, HOA dues, if there are any, and maintain that home. So sometimes the question is not, is my credit score high enough? But rather, do I have enough equity to actually put this loan in place? Let's talk about that. Because what happens when those derogatory items may be within the last 12 to 24 months, and if there's enough of them, then the lender may require what's called a LESA, which is a life expectancy set-aside of your real estate property taxes and your homeowner's insurance. Some borrowers qualify without one, while others may be required to put one in place. There can also be exceptions to this. The loan product is actually manually underwritten, which means there's a human being looking at that loan and making decisions on. And that person can consider the story behind the credit mishap. Maybe there was a medical hardship. Maybe there was a loss of a job or the loss of a spouse or some other reason for those derogatory items that popped up. Sometimes documenting those hardships can feel personal and a little invasive, but just keep in mind, we're not here to judge. The goal is really just to understand what happened and whether that reverse mortgage can help create a more stable financial future. Now, all of this is specific to the home equity conversion mortgage, as I mentioned, which is FHA's version of that product. There are other products in the market for reverse mortgages, which we call proprietary products. They may require a certain FICO score in order to get into those loan programs. So if you're wondering if your credit would stop you from getting a reverse mortgage, don't assume the answer is no. With a HECM, your credit score is not the full story. Your equity position, your recent credit history, and your ability to meet the loan requirements going forward are what really matter.